The US dollar has surged over 7% in the past 6 months, hitting near 2-year highs. And this rally is now weighing on corporate earnings, with S&P 500 companies increasingly flagging foreign exchange headwinds in quarterly results. A stronger dollar reduces revenue and profit for multinational firms by making overseas earnings less valuable when converted to the dollar. Tech giants heavily reliant on global markets are among the hardest hit. Apple reported that 58% of its revenue came from international sales last quarter. Other Magnificent Seven companies, including Alphabet, Microsoft, Tesla, and Meta, also generate 50% of or more of their revenue abroad and have earned of foreign exchange related pressures. Even Amazon, with just 23% of its sales from overseas, reported a $900 million foreign exchange impact in the December quarter, far exceeding expectations. The e-commerce giant now forecasts March revenue growth of just 5% to 9%, potentially its slowest on record. The dollar's strength is not just a tech problem. Consumer giants like McDonald's and Coca-Cola are also feeling this pinch. McDonald's has warned of a full-year foreign currency drag on earnings per share, while Coca-Cola expects a 6 to 7% hit to comparable earnings. Johnson & Johnson, another multinational, predicts a $1.7 billion forex impact on 2025 revenue. Goldman Sachs notes that the number of S&P 500 companies citing forex concerns on earnings calls have climbed. Historically, a rising dollar has slowed revenue and earnings growth for firms with high international exposure, a trend now playing out across multiple sectors. Two key factors are fueling the dollar's growth: US economic resilience and policy shifts under the Trump administration. Since the election, the US dollar index has climbed about 4%, driven by optimism around tax cuts, trade restrictions, and tariffs. Trump's newly announced tariffs on steel and aluminium take effect on the 12th of March, with similar duties on Mexico and Canada next month. A 10% tariff on Chinese imports has already been implemented. These protectionist policies have increased bullish sentiment around the dollar. Additionally, strong US economic data has prompted a recalibration of Fed rate expectations. With inflation concerns rising, markets now expect interest rates to stay higher for longer, further supporting the dollar's rally. Goldman Sachs predicts the greenback could gain another 3% over the next year, potentially extending the pressures faced by US multinationals.